Today is January 7th, 2014. Welcome to episode 73 of Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. Visit us at letstalkbitcoin.com for our daily guest blog, all our past episodes, and of course, tipping addresses. My name is Adam B. Levine, and today we're going deep. We start the show with the conclusion of the Vegas host session. Stephanie, Andreas, and I get meta and talk the origins of LTB, the journey so far, and frankly, lots more. The second part of today's show features one of my favorite people in the space, Amir Taaki, the Minority Report, as I like to call him sometimes, of Bitcoin development. He sat down last month with Peter Todd, Bitcoin developer and now chief scientist of the Mastercoin Foundation, to talk, well, everything. This interview is very wide-ranging and definitely not to be missed. Enjoy the show. So if there's one thing that is true about Bitcoin or true about cryptocurrency broadly speaking, is that things move incredibly fast. And I was thinking about this. I was thinking about this recently, and I realized that the reason why this is moving as fast as it is because we really have had almost no financial innovation in about 50 or 60 years. And that's been because every time financial innovations come along, there has been a way to stop it. And because the incentives to stop it for the existing power structure have always been so great that, we get little sneaks through, like a debit card, woohoo, NFC, woohoo. But ultimately, we're talking about the same systems, the same companies. I mean, what other industry has that? Now we have a system where you don't have that problem, where the fail states aren't reliant on central points of failure and instead are reliant on either broad invalidations of technology or, mass exodus from these new technologies. So failure by either adoption or failure by technical failure, but not failure by permission. And so if that was what was stopping us before, then that means that we have about 50 or 60 years of technological and financial innovation that should be happening pretty much all at once, because as it's been bottled up, suddenly the cork is off and the pressure can be released. That's kind of a long way of saying that we started this show 7 months ago. And
so much has happened in that time.
Yeah. What a wild ride.
Seriously.
Holy shit.
We're recording this, and I think we just released episode 66. That doesn't include the bonus content that we've released. That doesn't include the debates that we've hosted. That doesn't include the amount of things that have changed in this amount of time is crazy. And I wanted to share some perspective. When I started Let's Talk Bitcoin, I had been unemployed for 2 years. I was living off of savings at that point, and also help from my parents. And I had sort of retreated into the trees, as I like to say. I grew up in the Napa Valley, and we have some redwood forest up there that's very, very steep, too steep for agriculture, too steep for conventional agriculture, but for the type of unconventional systemic permaculture that I've always been interested in, and that my wife has been very interested in, it was kind of perfect. The point is that when I retreated into the trees, at that point I had been reading Zero Hedge every morning at 4 a.m. for about 2 years and trying to learn, and watching Mises.org videos and lectures from conferences and things like that, and was really looking for a way to have an impact in the space. And this is where I saw that we could have an impact. Initially, I started a different show besides Let's Talk Bitcoin. And on the last episode of that show, the Daily Bitcoin Show, we had Andreas on as a guest, and he described in very fiery fashion why Mt. Gox was criminally incompetent and why that was probably never going to change. And Stephanie, we brought her in initially because I wanted to have someone who was not me doing the introduction to the show. And so we initially contracted with Stephanie to do the voice work for the show. And as we kind of talked and we got to know each other a little bit better, it crossed my mind that I was interested in her as a guest host because you were already doing a Liberty show at the time. And so then that project imploded. After 5 days, it was a daily show, and I was doing all the work myself on zero budget. I called it my feats of strength. The idea was that you do an impossible thing in an impossible time frame with absolutely zero budget and no talent whatsoever, and then people think that you're amazing. And so we did this, and my timing was great because that initial show, those initial 5 episodes were during the price bubble, where we jumped up to $260. And at the end of the price bubble, I collapsed. and then 2 days later, the price collapsed. Absolutely. And I took like a week off and just like slept because I hadn't been sleeping.
I remember it from my perspective when you came to me and we had a long conversation about how the previous show had collapsed. And you were quite dejected at the time and feeling that you didn't have the energy to reboot, and you'd created expectations for a daily show, and could you really pull off a weekly, and how you would find hosts. And more importantly, how people weren't appreciating the value of having an audience and having high quality production, but were looking for, you know, quite a bit of money in order to be involved in the show. And I remember trying to persuade you that this was the greatest blessing you've ever received, because out of that wreckage, you had an opportunity to wipe the slate clean, set your own terms, and start again. And, you know, we decided to do just one show off the cuff that Friday. And, you know, the rest is history. I feel like the chemistry clicked and we created something wonderful, which was able to really highlight your incredible talents and bring this show to the level it has been today. It was a phoenix moment, you know, out of the ashes of the previous show, we created something, you created something wonderful.
I think that we created something wonderful. I definitely think that this has been, you know, very much a team effort. This feels like I'm just sitting here patting us on the back. That's not my intention. The point is that the perspective, you know, that you gain from being involved in a project like this, on the one hand, it's not a one-way thing. We're not giving out value and getting nothing back in return, even besides the monetary side of it. You know, the connections that we've made and the people who've reached out to us and the people we've met. I mean, really, you know, we were talking about conferences earlier. That's why these conferences are so valuable, is because the people who you meet and the people who are actually self-selecting to be interested are pretty freaking incredible. And so again, like,
opportunities come out of it like wildfire.
I feel like Let's Talk Bitcoin has just been one series of tipping points after another, because really what's happened is that we've hitched our wagon to Bitcoin. So when Bitcoin goes up in price, our audience goes up. When Bitcoin goes down in price, our audience stays put. Because people, once they kind of get looped in and they understand what's going on, then they don't leave. And that's really different, I think.
You know, I think as we go forward, we've got to be careful. Things are moving so fast in the Bitcoin world, and we've got to be careful to communicate in a way that people can understand, even if they're new. And also stay on the cutting edge for those who are already in the loop about Bitcoin and aware of what's going on. And I think we've done a pretty decent job of that so far. Maybe we could be a little more newbie friendly, but you know, that's okay. We're working on it all the time.
I totally disagree with that. I feel like we have not done a newbie friendly show at all. I even listened to our recent newbie friendly episode, and I don't feel like it's that, because I mean, the core problem is that when I started Let's Talk Bitcoin, the conversation that I wanted to have, you know, I had in my head that I wanted it to be for new users, because that was where I really saw the niches. New users coming in had no options, zero options. It was terrible. Now they have things like trybtc.com. Now, I mean, there are solutions out there that aren't audio podcasts, but that actually can kind of help walk you through that process. The conversation I feel like that we've been having is this more higher level conversation, is this conversation that's necessary to have simply because it's the important one right now. And it's not a new user-friendly conversation, because we're talking about these concepts at a high level. We're talking about people are struggling to understand what Bitcoin means to them now. And we're thinking, you know, years out.
There are tens of thousands of people who listen to the show. How do we keep all those listeners if they can't follow the conversation because they're too new? I think they can. I mean,
trust the audience.
Yeah.
They learn about Bitcoin, and then they use this show to increase their level of knowledge and catch up. And I think that's why you see new listeners coming in, catching one episode, and then starting from the very beginning and listening to 68 episodes
yeah,
back
that's
to
right.
back.
That's completely right.
We've seen this pattern repeat again and again. So I don't think that's a problem. Essentially, you created a library of content that people can catch up with. But let's talk more about the accelerating nature of this phenomenon. I mean, the last 6 months have gone past in a blur. But at the same time, I think there's this really interesting dichotomy, which is that it's very easy for us being in this bubble and being caught up in all of this forward motion to assume that Bitcoin has arrived, to assume that essentially all of the big things have already happened, or that the prices really shot up to high levels, or that now Bitcoin is expensive, the opportunities have been missed. And I think that is so wrong.
Yeah.
I think right now people are panting from the great ascent up the mountain, and I'm looking up and I see Everest ahead of us. We haven't even crossed the foothills. This is so small. I remember at the San Jose conference, I was ranting and raving to one of my friends about how amazing Bitcoin was and how amazing this conference was, and how, you know, there's all this global recognition. Imagine at that time, all this global recognition about Bitcoin and how we're beginning to get awareness in mainstream. And my friend sent me a link to a conference that was happening at the San Jose Convention Center that I think was about agricultural equipment, that had 10 times the audience that we had at the Bitcoin conference, with one word underneath the link: perspective. So such a gift. Anyway, so perspective, people, we are still smaller than, there are fetishes with more people in their community than ours at the moment. There are specialized dentist conferences that have 100 times the audience that we have at even the biggest Bitcoin conferences. And still 99.999% of the population of the world has never heard of Bitcoin. In the heart of Silicon Valley, you go speak to some of the most cutting edge, forward-thinking technologists, and 9 out of 10 of them haven't even heard about Bitcoin. If they have, they think it's some kind of funny money. They don't understand what it is and the implications it has. The weird thing here is that while we're going at this breakneck speed and it feels like so many things have happened, we've barely touched the consciousness of the world. And what that tells me is, oh my God, 2014 is going to be absolutely breakneck.
Seriously.
I mean, hold on to your hats. Human beings have a very hard time intuitively understanding exponential growth curves. It's something that Ray Kurzweil wrote about in The Singularity is Near. It's a very interesting book if you want to read it. But we try to extrapolate, and we can only extrapolate intuitively on a linear scale. So when you're doing that on an exponential curve, when you look out before the elbow of the curve, everything looks horizontal. And then one day, without you even noticing, you look ahead and everything's vertical. And you just pass the curve. And we haven't even hit the elbow yet. If this is the rate of growth and breakneck speed we've got at this point, at some point we're going to have our AOL moment. At some point we're going to have a crisis, a precipitating event that is going to shift the balance dramatically. That tipping point has not happened. And when that tipping point happens, what we're seeing today is going to be small potatoes compared to where Bitcoin could go. Now, don't discount the possibility that we could all crash and fall on our faces because of some insidious bug in the code. I don't think there are any external factors that can bring down Bitcoin anymore. We're past that hump. We're too big. We're too global. We're too widespread to shut down from the outside. We can only do it from the inside now. Bitcoin can only commit suicide. And that is a possibility over the next 3 years.
Well, that's the Facebook paradox, right?
It's a diminishing possibility. And really what I see is the potential for us to make it as far, just simply survive at this breakneck speed until we hit the elbow. And then amazing things will happen. Then we change the world.
This is true about any network reliant, right? I mean, like if you're talking about Facebook, essentially they're also trying to not break themselves while also trying to make it so that they're good for the future, so that they can have models to monetize and all these various things. It's the same thing with Bitcoin. Ultimately, MySpace isn't going to destroy Facebook, but Facebook could destroy Facebook. So basically, is that what you're saying here?
Yes, but there's one big difference. And I think the big difference that most people haven't realized is they look at parallel models like, for example, the deployment of the internet. And that required some serious infrastructure heavy lifting, which we don't need in Bitcoin. And you look at Facebook. For Facebook to sustain its growth, it had to develop an entirely new model for server deployment, for server provisioning, for building servers, for building data centers, and for operating a massive global network. We don't have any of that. You install the app, adoption itself creates infrastructure. Every person who adopts becomes part of the infrastructure by running a full node client if they can, by buying some mining rigs if they can. And essentially what's really interesting about this is that there are no constraints to the scale of Bitcoin in terms of infrastructure because adoption and infrastructure happen at the same time. So we don't have a problem of running out of capacity because every new user brings the capacity with them. And in fact, if you take it to its extreme, Bitcoin really expresses the core network effect concept that Bob Metcalfe first talks about in 1984, which is the value of the network increases exponentially with the addition of each node. Because there's no overhead to adding a node, the value of the network, the capacity of the network, the velocity of the network, all of those things really do increase exponentially with the addition of each node. So I think the next year, the most important metric, the only metric that matters, is user adoption. And so we don't have many of the constraints. In fact, if we do nothing in the core protocol in Bitcoin right now, we can scale it. There are a few problems with blockchain size. There are a few problems with transaction velocity and capacity, but they're not that difficult and they can be addressed. Other than that, this network really doesn't have too many capacity constraints. So what we're going to see is a level of exponential growth that you very rarely see in technologies. And then add to that the other side of the coin, the economic incentives. oh my God, the economic incentives. This is the first network effect that's fueled by money because it is money. And we have never in the history of technology seen that before. The first money that's digital has its own level of network effect that is a huge multiplier. So it creates investment from the inside out instead of expecting it to come from the outside in. And if we actually manage to bootstrap peer-to-peer crowdsourcing, we can accelerate it another factor of 10, another order of magnitude. So when people think, Bitcoin's expensive at 1,000, we're reaching our capacity limits, I laugh because, you have seen nothing yet. I really am very optimistic because the more time that goes by, the more Bitcoin survives, the stronger it gets. And it is already, I think, unstoppable, and it's simply accelerating like a freight train. And anybody who stands in front of it will be squished like a bug.
Purse.io is a gift exchange that lets you get Bitcoins at only a 6% premium and with a credit card. How does it work? You purchase items for other Purse.io members from their Amazon wish lists. In return, you get Bitcoins in the amount of the Amazon purchase. The more people participate, the more Bitcoins will be available, so tell your friends. Get exclusive access today at Purse.io.
EasyDNS is the Swiss Army knife for your domain names, helping meet their customers' individual needs since 1998. EasyDNS has been an outspoken critic of SOPA and CISPA. EasyDNS was an early supporter of Bitcoin, and now they are proud to sponsor this show. Do business with a company that shares your values. Get a 13% discount when you pay with Bitcoin. Go to bitcoin.easydns.com and be sure to use discount code LTB.
Whenever we're talking about the price, the difficult thing is to try and stretch out the time frame. And I think ultimately that's what you're doing here, Andreas, right? You're saying, over the next, say, long time in Bitcoin, so let's say a year, that's what you're talking about.
Yeah, people talk about a 10-year horizon for Bitcoin, which I think is ludicrous. I put an upper limit on Bitcoin of about 3 years. Pretty much everything important in Bitcoin is going to play out in the next 3 years. Over time, what I'm doing is I'm compressing that time frame. Right. So previously, I thought that a lot of the things that we would achieve in 2014, we have now achieved in 2013. And if we continue at this pace, the 3-year time frame is going to compress down to a year and a half or 2. And really, I think people need to reset their expectations and their perception of where Bitcoin is going and how fast it's going.
Where is Bitcoin going and how fast is it going there? Let's reset people's expectations. I feel like I'm pretty forward looking on this, Andreas, but I'm sitting here having this conversation with you, and I feel like I should just be interviewing you rather than doing this as a host segment, because you very clearly have it in your head where you think we're going. And I'm still more unclear on how long it takes us to get there. I agree, things are accelerating really fast, but what do you think we're going to see over the next, this 3-year time horizon you're talking about?
So I think we're in a unique position because of the work we do. We get a lot of people who come to talk to us about their startups well before even the planning stage and ask us for our opinion and ask for our help and technical advice. So we can see some of the things that are in the pipeline. And what I'm seeing is this completely new wave of companies that are coming in that are pushing adoption in 3 different ways. The first one is bringing in mature operational and management teams, a whole new spirit. So the age of PHP MySQL developers who throw together an application and try to build a global exchange on top of that era is truly over. People who are coming into this business now come with deep technological expertise, with deep management and operational expertise, and that's going to change the velocity of Bitcoin. The second one is that we're seeing the development of the developing world. And so we saw the shift in the center of gravity. And as more and more of the countries in the developing world come online, you get this simultaneous rush of new user adoption, which is going to push the price up. And at the same time, you get new developers, new companies, new startups that can now operate on a global level. So if you're in Argentina and you have Bitcoin, you can start behaving like a globalized mom and pop shop, a mom and pop multinational. And you can actually bring to bear the resources of the entire globe's financial capital, development experience, your own developers, cheap labor within your own country, and compete head to head with every other company in the Bitcoin ecosystem. That unleashes a torrent of innovation at the edges. And then the third part of this is this new wave of Bitcoin innovation that is basically shifting the focus from Bitcoin currency and enabling exchanges, payment networks, etc., sort of the peripheries of Bitcoin, enabling some of the on-ramps and speeding up adoption. And as that is playing out, now we're seeing the focus switch to the layers above, to implementing all of the other applications beyond currency that can be implemented. So digital shares and digital autonomous corporations, peer-to-peer lending, peer-to-peer crowdsourcing, peer-to-peer payments, remittances. These are the killer apps. Currency was just the first shot. So if we manage to put a pinprick into the remittance market, something that Alan Safahi of ZipZap is doing with a passion and a level of principle that I absolutely admire, put a pinprick into that, create a single little flow, and watch the dam break as $500 billion of pent-up capital pour out of the developed worlds into fueling the developing world and uplifting poverty. Those kinds of things that bring with them the potential to huge global social change. Those are the applications that are being developed now. Things like Mastercoin and Colored Coins and NXT, the protocol layers above that enable not just new innovation, but entire new types of innovation and entire new industries to be decentralized and disrupted with Bitcoin. We've moved past payments, and all of that is going to happen in 2014, and I didn't expect it to happen this fast. We've been talking about the layers above, and now they're happening, and we can see this coming down the pipeline. So those three forces together are simply accelerating everything. The other thing to realize is the wave of adoption trails 3 to 4 months behind the media burst. So China wasn't the symptom of the $1,000, was the cause. We haven't seen the symptom of $1,000 Bitcoin yet. We created this huge media bubble from $1,000 Bitcoin. Wait until February, because all of that is going to turn into user adoption. All of the people who heard about it in October and November and December are going to jump onto the bandwagon in January and February. And so these waves feed on each other, because that wave of adoption brings its own price increase, which creates the next media bubble, which 4 months down the line creates the next wave of adoption. And the cycle is getting shorter by the time. So what you have is all of these feedback loops that are rushing into Bitcoin, because why? As you said, 1950s technology, and suddenly we have the opportunity to move 70 years forward, 60 years forward in terms of financial innovation, and to do it without permission at the edges of the network. And we've now reached the point where people are beginning to do that, and their efforts are not even visible yet. But when they become visible, whole different ballgame.
Talking about trends again for a second, at this conference, I think I met more people who are like from outside security consultancies or companies, full service, what have you, than really at any other previous conference. A lot of times it's been, kind of the libertarian side and then the investor side. But this time it really feels like the service industry is starting to come in and look seriously at this.
Yeah. Remittances are possibly just the first part. Then you have the whole outsourcing, offshoring, services talent that you can bring in. I mean, I think the big event in 2014 will be India. And when India wakes up, they have the parallel tracks of being the second largest remittances destination in the world, with billions of dollars going to India every year, and the largest outsourcing, offshoring center for technology in the world. And they haven't even woken up to Bitcoin yet.
Yeah, I was seeing a lot of the layers on top at this conference. I saw a lot of talk. Mm-hmm. People are excited about crypto equities, Mastercoin, ProtoShares, that kind of thing. And, there was some skepticism about those too, but it was being talked about a lot.
Cryptocurrencies, you don't have the ability to stop it, but then again, there's also not a central company backing it. But something like ProtoShares, Invictus Innovations is based out of Virginia. So, that's not a licensed, I mean, they're a corporation, but they haven't done any of the due diligence requirements to do any sort of equity offering in the way that proto shares could be interpreted under certain interpretations.
And I'm hearing from all of the companies that are not doing things like Mastercoin and Colored Coins, but are doing things on top of Mastercoin and Colored Coins, and are taking that platform and finding incredible new ideas of how to build layers above it that leverages that protocol layer. And that's going to fuel the development of the protocol layer even faster. It's going to be an exciting year.
Yeah, I mean, without a doubt, 2014 and 2015, that's been my feeling, is that these are the years. These are the years where the important stuff's going to happen. These are the years where we figure out if we stay in the United States. I mean, because to a certain extent, we have risk doing a show like this in the United States. We have a corporation in California that, all of the costs run through and pay taxes and all that jazz and try to comply. But at a certain point, VC is obsolete. So you don't need to be here anymore if you've been in Bitcoin for a while.
No, absolutely. You can grow organically. And, I work as a technical advisor at a board level for a number of Bitcoin companies. And one of the first discussions I need to have with them is you do not need to raise capital. You do not need to give part of your control and equity away to a venture capital firm that doesn't understand what you're doing and just has money to throw at you, because you can both grow organically by riding the logarithmic dragon of Bitcoin. And if needed, and you need to float for a few months, you can crowdsource or find a couple of angel investors within the Bitcoin community, express the vision to them, and they will come and help you float long enough so that your viral, organically growing idea can take off on its own. And then you can get both the full control and freedom and the success that you need. So yeah, VCs are already obsolete in Bitcoin, apart from the fact that there are some people within the Bitcoin community who are in effect VCs and angels, and what they bring to the table, which is a really important thing, is expertise in operations within Bitcoin companies and in management of Bitcoin companies, because managing operations on a logarithmic scale is scary. The biggest issue that Bitcoin startups have today is that you can't do linear growth and you can't do local deployment. You are global from day one. And if you are successful, your growth curve is going to be 10, 1,000, 10,000, 100,000, 1 million, 10 million, month after month after month. And you're going to die, not from starvation of funds, but from being so overwhelmed that you can't deliver on the operational promises and your users abandon you for someone else who can do operations better. Tony Galippi from BitPay was talking about scaling his organization from 15 or 20 people to 115 people over a period of just a few months. And, one of the biggest problems we're going to have, and possibly one of the most exciting opportunities in Bitcoin, will be sourcing resources, human resources. We need to hire hundreds of thousands of people into Bitcoin companies over the next year and train them in Bitcoin and leverage their skills. And it's now much broader than I just need a developer and a web designer. It's operations, it's marketing, it's security, it's business development, it's infrastructure, all of the traditional basics of a serious company. And we need all of them.
The development thing has been a problem, though. Talent is now starting to come into the space, but to this point, I mean, I know a lot of people who are doing startups who've had a lot of trouble finding developers who are actually able to deliver on what they need in a fashion. Having to teach people about Bitcoin has been, it seems like, a hurdle that these companies that are trying to hire developers have had to go through to this point. The cost of developing in the United States, again, we're based out of California, so the cost of hiring a developer, when we work with somebody down in Latin America, the cost is a quarter, if not less. And so that means that if you have a budget, you can hire 4 developers for the price of 1. That doesn't mean that developer in California is better. I mean, they might be better, but ultimately the cost is more based on the locality, and Bitcoin doesn't care about that. So again, this outsourcing thing, I mean, I just feel like, again, like the development teams that are really going to make a difference in this are going to come from outside simply because it's less expensive to actually pay them to do this full time. I mean, that's been a problem.
And that's why I think India is going to be critical in 2014, because the reason they're going to come on board is because the more of the talent we source from there, the more we infect them with the idea of Bitcoin. But here's another little point that people are missing right now. If you have a Bitcoin company and you're able to generate Bitcoin cash flow, as a result of that, you can offer effectively a stock option package for your employees, which is a really simple proposition. Take a part of your income, your weekly paycheck, and get it paid in Bitcoin and hold. And essentially, what you're doing is you're giving your employees stock options in the entire Bitcoin ecosystem by paying them in Bitcoin and creating a source of low cost dollar to Bitcoin exchange through payroll. So we can attract talent. And I think even in North America, we've now reached the point where you can have a serious conversation about people about what do you want to do with your life? Do you want to be part of the most exciting technological development of the last 2 decades? Something that will have a world impact? That are you willing to put in long hours for low pay and take a stock option in the form of Bitcoin and stock and equity in the company? And I think you're going to find a lot of people who are going to say yes, because a lot of people are beginning to see the difference between working for one of the old corporations that are fueling war and economic exploitation and being able to be part of something where they can align their principles with their skills and actually sleep at night and feel good about themselves instead of hating themselves every morning because they're working for the man. So you combine that with stock options in Bitcoin that have the possibility of appreciating, I think we won't have any trouble hiring talent. What we're going to see is Bitcoin sucking development talent from all of these e-commerce, Web 2.0, find another way to do shopping and push more ads, the boring jobs, and nobody want to work anymore.
Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules, and they have no respect for the status quo. You can quote them, disagree with them, glorify or vilify them, but the only thing you can't do is ignore them, because they change things. They push the human race forward. And while some may see them as the crazy ones, we see genius. Because the people who are crazy enough to think they can change the world are the ones who do.
Okay, so hello, Peter Todd. You write a lot about Bitcoin and involved in the issues around Bitcoin. What's your technical background?
So my background is as an analog electronics designer. A lot of people in the Bitcoin community have very sort of programming backgrounds, whereas my background and what I sort of do as a day job is much more related to analysis and math. Of course, it's kind of got into them what I've done in Bitcoin, which is very much analyzing the system as a whole, rather than necessarily working on software development directly.
When you discuss Bitcoin and when you analyze Bitcoin, it's coming from an engineering standpoint. And do you think this is different from someone who comes from a different background, maybe a development background or a scientific one or a mathematical one?
Yeah, I think that's quite accurate. And I think what's interesting about Bitcoin is how, because it's a totally new system, there is still a lot of analysis that needs to be done. And it's also analysis that is very amenable to math and to equations and so on, as well as, logic and reason. And because it's new enough, that's still all open and it needs to be done.
Yeah. How would you describe Bitcoin?
Well, my favorite analogy for it is I like to go talk in terms of a village. So let's suppose you get a village and everyone has a notebook. And on this notebook, you record transactions. For instance, Alice might want to go pay Bob, return for some chickens, and Alice will go and tell Bob, you can note down that we'll deduct 1 village coin from my account, and you can add 1 village coin to your account. And then Bob and Alice both go tell everyone else in the village that this has happened. And very quickly they come to consensus that yes, Alice has paid Bob. And of course, the system doesn't work because people are dishonest. And what Bitcoin is cryptography that lets the system work by making these entries honest. How it actually works under the hood, well, that's a whole other story. But fundamentally, it's really very simple. It's just an accounting ledger.
And how about how it works under the hood? How would you describe it as an engineer?
I would actually describe it as a political scientist, which is to go say that it's democratic. And people hate me using this term who are heavily involved in the development because democratic carries a lot of baggage. It makes people think you can go vote for changes to Bitcoin fundamentally, which it's sort of true, but it sort of isn't. But what's really important, though, is that, going back to our village example, the way Bitcoin comes to consensus to figure out who really made what transaction is by having nodes you do something special called mining, go show that they agree that a transaction's happened with a vote. And it's a very strange sort of vote because it's what's called a random ballot. So approximately once every 10 minutes, a miner, completely at random, is picked, and then they get to decide what the next block of transactions will be. And over time, this is approximately like everyone voting in proportion to the hashing power they represent. And then hashing power is a special thing where, because there's no known way to vote over the internet without involving some central authority to, determine who is a human, who is someone's alias, instead we completely sidestep that problem by having voting involve solving this useless math problem called the proof of work problem. And, that's a technical thing, but long story short is you do some useless work and you get a certain amount of voting power, so to speak, which gets referred to as hashing power. And then that's how you decide where the Bitcoin blockchain goes.
Some developers don't like using the term voting. Maybe there's also some feeling that it's like people aren't participating in the changes.
I think what it really comes down to is an analogy would be Bitcoin is a system with a incredibly strong and restrictive constitution. The voting in the system can do nothing more than decide what transactions are accepted and what ones aren't. It cannot make a transaction that is invalid because it doesn't follow the rules of Bitcoin get accepted into the chain. It cannot make the rules of Bitcoin change. All it can do is decide that a transaction may or may not be included in the blockchain at a particular time. That's it. So you really can't do much with that kind of voting. That's nefarious, at least assuming everyone checks the rules.
So Bitcoin is a consensus system. Is that awesome or not? And what's the problem? Or is there every technological kind of property has its upsides and its downsides? What are the upsides of a consensus-based system? What are the downsides?
Well, certainly the upsides is that when it's working properly, it's very free from outside interference. The consensus automatically is a consensus of a majority. So anyone who participates in Bitcoin fully is part of that consensus, part of that choice. And for some outside force, such as a government or a large corporation, to go manipulate that consensus is only possible if they choose to participate in it. Now, of course, this does leave Bitcoin open to something called the 51% attack, where some group or person or whatever chooses to buy enough hashing power to outvote everyone else on Bitcoin. And because they can do that, then they control the destiny of the Bitcoin blockchain. Now, they can't go and put invalid transactions in the chain if everyone else is checking it. But what they can do is they can just stop transactions from ever appearing, or they potentially rewrite history. Transactions that have been confirmed as part of Bitcoin get undone bit by bit.
How will Bitcoin evolve, and what is the power that the miners have, and how will that balance of power change?
Well, I keep on saying that if everyone uses Bitcoin correctly, miners don't have any power. But there's a big catch with that, which is a lot of people are using Bitcoin without actually verifying Bitcoin, the history of the blockchain. And the technical term for this is called SPV nodes, which stands for Simplified Payment Verification. And an SPV node skips all this laborious checking that everyone was being honest and following the rules. Rather, it assumes that everyone is following the rules and assumes that the majority of hashing power is correct and just leaves it at that. And the problem with this then is it does create a situation where mining is voting. If everyone only used SPV nodes, then a miner could very well decide that, yes, 51% majority now decides that Bitcoin can be inflated and we can make however many Bitcoins we deem necessary. And if they choose to do that, they can make Bitcoins out of thin air. And unless you check the history, you have no way of knowing if that has happened. Of course, in practice, someone does this and you'll see it on the news, you'll see it, and so on and so forth. But from a software level, your software isn't checking that. And that's a real problem. And we do not yet know how the political science of decentralized cryptocurrencies actually works. If miners choose as a majority to create Bitcoins out of thin air, does that mean people shun those miners? Does that mean people start running full nodes? I don't know. I don't know that we're going to know until it happens.
Yeah, the blockchain is getting bigger and bigger. So how can we own that infrastructure?
Well, this is the big catch with Bitcoin. If you have a consensus system, to have consensus over the history of the blockchain, every person who has that part of that consensus must have the entire blockchain, which just doesn't scale. If you have computer science terminology, if you have N people who are participating in this Bitcoin blockchain, and each of those people makes a transaction, well, then every person needs to process everyone else's transaction. N squared, it's exponential growth. Or, heck, I should be more mathematical, it's quadratic growth. And that just doesn't work as you get enough people. Fortunately, computers are extremely fast and efficient, and we've been able to get away with the system for a lot longer than, in some rights, we really should have. In some senses, we've made this pig fly by attaching rocket motors to it. But that only goes so far. And in the long run, we have to go do something about it. How that will actually take place, I don't know. What I do know is that if we don't solve this problem, and we're already seeing this, we see people run Bitcoin clients or use Bitcoin in ways that doesn't verify this history, and is therefore outsourcing your trusts to someone else to do the job for you, which sounds very much like conventional banking anyway.
Yeah, you said something about good Bitcoin like a political science. Yeah, and
yes.
In some way it's also about like the economics of how the miners and all the different groups in Bitcoin interact, the manufacturers, the developers. Yeah. What are some of the interesting models or concepts that you see emerging out of that will happen in the future that could give us a glimpse about how this system will function on a macro scale? What
I want to see happen is for there to not be distinctions between all those different groups. When we have these distinctions, that's when Bitcoin is threatened. Because when you have those distinctions, you're putting, especially with regard to mining, you're putting control into a smaller group than everyone. The ideal Bitcoin system would be everyone participates equally. Everyone does a bit of mining. Everyone does a bit of validation. Everyone is pulling their own weight. And it's very unfortunate that due to the technical issues, we're not seeing that. Instead, we're seeing people outsource all their trust to centralized services like blockchain.info, centralized dependent technologies like SPV nodes, like Android Wallet. And, again, Electrum follows the same sort of problem. Whereas using Bitcoin with full nodes, as is done with the Bitcoin reference implementation or with Android Wallet, that's not so popular. And people are, in a sense, taking the easy way out. Now, if you go and change the way the technology works to make it easier to, for instance, verify parts of the blockchain, then everyone can go and pitch in. Everyone can be a part of this. But there has to be a will that, yes, this is important, and yes, we need to change the technology to do that. Currently, we've got people who get a lot of attention and a lot of respect by some parts of the Bitcoin community who don't see these issues as important at all. They just dismiss it as something that, whatever, Bitcoin's working fine. Bitcoin needs to fix scalability. Let's just have a quick patch to this and go on from there. Whereas I think the more thoughtful people in the community realize that it's not so easy to go fix problems in Bitcoin once you cause them, because you've got this huge moving system. You've got actors who may have incentives to leave the problems in place. And furthermore, you've competitors to Bitcoin, like Litecoin and other altcurrencies, that may very well just take Bitcoin's place instead.
What do you think are the technical problems that are driving this kind of inevitable specialization?
Well, I don't think it's inevitable. If we study this issue and we think carefully about it, we can go find ways to make it not inevitable. In some small ways, I've done things myself like that. I proposed this technology called TXO commitments that enables nodes to not store the full history of the blockchain, while still, with other technologies, can still verify parts of it, so that as a collective, the entire history is verified. There's also things like fraud proofs, which enables nodes that once they do find the rules have not been followed, to sound the alarm and tell everyone else so that they can immediately take action. There's also concepts for how to go shard the blockchain, to go reduce the individual amount of the scope that any one person has to evaluate to come to consensus. And finally, on top of all that, there's sort of more immediate, more practical ways to achieve this stuff, like off-chain transactions, which just takes the load off the system and buys us time. None of this stuff is all perfect, but it's important to go and research this stuff and accept that the road ahead is bumpy, and we cannot allow Bitcoin's decentralization to be sacrificed. We may find that by doing that, we wind up with Bitcoin that doesn't grow quite as fast as some investors would like. But that is a much better trade-off than destroying what Bitcoin offers to the world.
What's the sharding? That's interesting.
Well, the basic idea behind that is a recognition that you don't necessarily have to have one consensus domain. And that's kind of a very technical term that really means you don't actually have to have everyone have a complete view of the entire state of the whole system at once. If you're clever, you can restrict the view that any one person has to have. A very simple example I like to use, which isn't necessarily a great idea, but it's an idea that can work, is suppose you had a ring of blockchains and you made the system such that pairs of adjacent blockchains on this ring had to be verified in parallel to allow mining to progress. Because each pair is verified, you can move coins in a series of transactions around this ring from one blockchain to another.
You would use a special transaction.
Yes, a special type of transaction. Yeah. Which we already actually have the ability to.
Right. It's on the wiki, isn't it?
Yeah, it just doesn't work as well as we might like. But if you built a system around this concept, you would make it work. And what that means is that even though any individual miner only needs to keep up with a small section of this weird ring system, you can still spend coins from anywhere. You can send them to anyone, and the whole system as a whole actually works. But of course, there is a ton of practical issues that need to be solved and need to be studied. But if you accept that decentralization is important, you go solve these issues. You go study them rather than just taking the easy way out.
So the blockchain is getting bigger and bigger, but there's a limitation in the code, which is limiting the size of the blocks.
Correct.
And making them a scarce resource. So there are less transactions getting into a block than if this limitation didn't exist.
After all, if the blockchain is big, with certain technologies like TXO commitments and its close cousin UTXO commitments, you don't actually need to download the entire blockchain to get your node started. You can download a subset of that data. Or potentially with TXO commitments, no data at all. But you still have to keep up with the bandwidth of new blocks as they come in. And that's a real problem, because if you allow the block size to grow, the size of an individual block, then at some point it's a sufficient amount of bandwidth that not everyone can keep up, and especially not people on low bandwidth connections like home residential connections, and especially anonymous connections. And on top of that, and something that's been found more recently, is that you create very perverse incentives in that, and I'm going to get a bit technical here, the cost to include a transaction in the block is related to how fast you can tell other miners about that transaction and about that block as a whole. And if you are a miner who has a lot of money, you can invest a lot of effort into fast internet connections, your cost goes down, which means you make more money, therefore you can have more equipment. Therefore, you can make more money. And also, just by being bigger, you're less likely to have someone find a block at the exact same time and not be the one who found the block that wins. So that's called your orphan risk. And again, the bigger you are, the lower your orphan risk is. And it's just this set of interlocking incentives that drive centralization. With a block size limit, though, at least incentives have a limit in that. Sure, there's still an incentive to be a bigger miner than a smaller one, but the amount of incentive compared to the total incentive to mine at all is much smaller. We in the theoretical community, if you will, we can go see how potentially that incentive will not cause disaster in it. Whereas if you have no limit at all, that incentive is much, much stronger. And it's hard to imagine how mining wouldn't become very centralized in that circumstance.
Yeah, so the block size limit is a really important issue for you. And you're saying that the consequence, if we just got rid of it, while transaction fees might drop, might become lower, it will allow miners to form an even bigger cartel.
Yes, and not so much allow, but encourage them to.
Encourage them to, yes. Right. But surely the market will self-regulate.
Why would it?
Some people say that if a miner produces a block that's too big, then another miner will just reject it. What would you say?
Right, but this is the issue. If you produce a block that's too big, the actual incentives end up being that you earn more money in many cases than the miners who didn't do this. And the reason is, if your block ends up being accepted, while other miners were not mining to extend your block rather than the block before, they were wasting their time. So that means some percentage of the time where they could have been earning money was spent wasted, whereas for you, 100% of the time wasn't wasted. So if your goal is to earn more money than other miners, which is generally what a business wants, because after all, if they're earning more money, the miners, or I should say the hashers, who are mining at that pool will go move from the smaller pool to the bigger one. So you get this ugly set of incentives. It's not enough to go make the assumption that the market will self-regulate. In this case, it doesn't.
You think we're going to have to increase the limit in the future?
I don't know. I think in the near future, we definitely shouldn't increase it because we already know that increasing it will lead to disaster. Now, if we only increase it a little bit, maybe it won't lead to disaster. But we know at some point, if we increase it enough, it will. And because the political science of decentralized cryptocurrencies isn't well understood, we don't know what's going to happen when that limit is breached. It may be that you can't recover because there's simply too much incentives from a large part of the community to continue in a bad situation. Again, talking about pools, if a pool knows it will make less money because the limit gets reduced, they're going to push very hard to keep the situation as it is, even if it leads to a Bitcoin where effectively only a handful of people control it with no other way around it.
How destructive the effects of increasing the block size limit will it be observable? For instance, if we double the block size limit, would it be 10 times less worse than if we 20 times the block size limit? Or is it something that you increase and you might not see the effects, but then you breach some limit and the system breaks down? In your model, how would increasing the block size limit affect
keep in mind, we're not strictly talking about technical stuff here.
Right.
We're talking about social stuff. For instance, in an environment where governments do not attempt to regulate Bitcoin, you can get away with much, much bigger limits than in one that you can. And the reason is that if governments do not attempt to regulate Bitcoin, it's much more acceptable for miners to be publicly known. It's much more acceptable for them to be forced to have the type of high bandwidth internet connections that are easy to find and shut down. Whereas if government decides to start regulating Bitcoin more heavily, and remember, we're talking regulating here, I really doubt they would ever try to ban it. Rather, they would do things like say, all right, miners must only mine approved sets of addresses. Or even more likely, miners must not mine transactions related to certain blacklists. And that kind of regulation can creep up. And while it's happening, it's very easy for larger mining pools, which have an incentive to exist because they make more money, to then start following these regulations. So you might, for instance, find that your transactions, which were related to some nefarious deed that some government has decided needs to be stopped, you suddenly can't spend the money in your wallet without waiting maybe a couple hours till that 1% of miners who are not following those rules finally gets around to finding the block. Maybe 5 years down the road, you'll never be able to make a transaction. We do not quite know how this is going to play out, but we can certainly go and see that having mining power more centralized makes it much easier to control what the mining power does.
Do you see miners as the biggest threat to Bitcoin?
In some ways, yes. But not miners, mining pools.
Mining pools.
The size of mining pools is a very, very big threat.
Yeah. We've all seen the big ASICs, like the big facilities.
Well, ASICs are another matter. You've got to remember there's a difference between mining pools and mining hardware.
Right.
Mining pools seem to be a fundamental, desirable feature because people want it to be easy to get their hashing equipment and start hashing and earning money. And it's much easier to do this by selling your hashing power to a mining pool.
It's also about lowering your expectation, but also lowering your variance.
Yes, lowering your variance, not expectation.
Well, you're sacrificing some expectation for that. For that,
you have to find what you mean
variance.
by expectation.
Your average payout. If you might solo mine, you would get more.
Right. But that's not necessarily true. And in fact, it appears that mining at a mining pool, you do earn more money per block, assuming modulo the mining pool's fees, the bigger mining pool earns more money per unit hashing power than a small solo miner.
Why is that?
Well, that's because they're more efficient. And they're more efficient because because more of the blocks that they find are not orphaned.
Okay.
And they're also more efficient because they have one set of expenses that's amortized over all the clients. whereas you had to go pay for a full Bitcoin node. And, like it or not, it's not free. You have to go pay for your time setting it up. You have to pay for your computer. And those expenses are only getting higher in the future.
When you shop with Bitcoin on Gift, you can get gift cards from over 200 retailers. Think of the possibilities. Not only is your holiday shopping taken care of in a snap from your Android device or on the web, but now you have a way to purchase everyday items from stores like Target, CVS, Gap, and GameStop using your Bitcoins. That's not even the best part. When you shop with Bitcoin on Gift, you get 3% back. Ready to shop? Visit GYFT.com today.
Happy holidays from Let's Talk Bitcoin. If you like the work we're doing, we appreciate Bitcoin tips of all sizes at letstalkbitcoin.com. Just as importantly, share the show with your peers and review the show on iTunes. Don't be kind, be honest. LTB reaches nearly 10,000 listeners, but has less than 50 reviews anywhere I can find. I'd very much appreciate your help in remedying this situation. Thanks for listening.
So Bitcoin as a system it's like you've got the merchants and the wallets, and then maybe you have some library code, and then you get down and down, you get to the actual Bitcoin mode, which is at the bottom of all of this infrastructure. And then in the Bitcoin mode, you have the network stuff and so on. But the core part of this is the consensus part.
And keep in mind, what I study about Bitcoin, for the most part, I only care about those lower levels. I don't really care that much about what merchants are doing. I don't really care that much about what their customers are doing. I mean, I do care that they use Bitcoin in ways that are secure.
Maybe explain a bit more about what this part of Bitcoin is and why it's...
Well, I care about the software. I care about the way the technology works. I'm not that interested in the financial environment around exchanges. I don't really care that much about the latest merchant API. None of that really matters much to me. I care about how do Bitcoin transactions happen? How do Bitcoin users use wallet software to go and make those transactions happen? And so on.
Well, what is the consensus part of Bitcoin?
Well, if you want to talk about the consensus part is the protocol. And the Bitcoin protocol is defined by a couple thousand lines of C++ source code. And that is the source code that Satoshi wrote.
You mean the network protocol?
No, I mean the Bitcoin protocol. Remember, the network protocol, I think you mean the way that blocks are passed around between nodes. That is not part of the Bitcoin protocol.
All right, so you mean the block validation and scripting?
When we developers talk about the Bitcoin protocol, or at least when some of us developers talk about the Bitcoin protocol, we refer to the rules that decide whether or not a block is valid, and in turn, what is the state of the current blockchain, given the set of information you know about. And that protocol is defined by a few thousand lines of C++ source code. People often have this idea that this protocol is some specification based on something where the specification needs to be written. But the easiest thing to do is just say the specification is the small portion of the source code from the Bitcoin reference implementation as related to consensus.
And this is what makes Bitcoin.
Yes,
right?
That's exactly it.
And how does all the different Bitcoin versions work together?
Well, I think you got to understand that when it comes to the reference implementation on GitHub, /Bitcoin/Bitcoin, very little of the core consensus code has ever changed. For the most part, what has changed has either been cosmetic, such as adding printfs just to go and give debugging messages, or potentially moving a bit of code around or changing the indents, or stuff that we were really hoping wasn't important, like the level DB upgrade, which of course is a great example because we screwed it up and we ended up creating a hard fork. But in general, it doesn't change because it is the specification of what Bitcoin is.
Why is it important not to change it?
Because the moment you change it, the network can get out of consensus. And Bitcoin is unique in that consensus is a security issue. I mean, I like to use the analogy of, let's suppose you're in a crowd and you have a bag full of valuables, maybe, the Queen's jewels or something. And the only way to protect that bag is by holding onto it. Meanwhile, you have thieves trying to come in and grab that bag and steal the Queen's jewels. And you have to ask yourself, would you want everyone pulling in the same direction, trying to hold the bag in one place against the thief trying to steal it? Or do you want the consensus to break down over who is the thief? and have people pulling against each other, making it much easier to overpower the strength of those who are trying to hold that they keep it secure. And in the case of Bitcoin, well, if nodes disagree about what is the Bitcoin blockchain, and especially if mining nodes disagree, you can have work done that is not in consensus, creating a fork, and then attackers can go and use the fact that work was not done in consensus to go create transactions that appear to have confirmed but haven't. And from that, of course, then you can go steal money from people. You've destroyed what Bitcoin is supposed to be, a secure way of determining whether transactions have actually happened or not.
So the consensus code, it needs to be the same between nodes, or the nodes need to operate in a deterministically singular way.
Yes.
How much can this code deviate? You gave the example of the level DB upgrade, which caused a fork.
We're at the level where even if people run the exact same code, deviations still can happen because the execution environment, the computer that the code runs on, isn't always exactly the same, which I think should give people a sense of how hard it is to make sure consensus is maintained. I have never seen an alternative implementation from the ground up that has even come close to getting it right. The ones that you do see, you find bug after bug after bug where it doesn't quite match the semantics. And it may even be that they fix the bug. But in Bitcoin, fixing a bug is not fixing anything. It's breaking the consensus. You must implement Bitcoin exactly the same way as everyone else does, or you risk breaking consensus. And, it's a very tough barrier, and I don't think computer science is at a point where we can re-implement Bitcoin and get it right. Now, you can certainly change all the stuff around that consensus code. You have completely different wallets. You have completely different rules for how transactions are relayed from one node to the other. But when you receive a block, you must perform the exact same actions to determine whether or not the block is real as everyone else does.
They say in software development, there's never any software without any bugs in it.
Yes.
And so do you think that in the consensus code that there are bugs in there that we don't know about that need to be replicated, that may be alternative?
Absolutely. And that's what's so hard about replicating Bitcoin. Every time I go spend some time looking at the code in detail, it seems I find another thing I didn't know about before. And people underestimate just how complex a few thousand lines of source code can be when you have to match its behavior exactly.
Right, so the problem is not a few thousand lines of code is not a difficult thing.
Yes.
It's relatively easy.
Yeah.
You're making the argument that it's not that we have to write a couple of thousand lines of code. It's that those couple of lines of code must perform very singularly in its functionality.
And what's interesting about that is to write Bitcoin is easy. If you want to implement an altcoin, or if you were the person who implemented Bitcoin in the first place, writing that code is not that hard, because what it does is actually pretty simple. But when you want to write a bug-for-bug compatible reimplementation, that's just a nightmare. It's incredibly hard.
And how about how Satoshi made Bitcoin?
There's a lot of suspicion that Satoshi wasn't even a programmer. Because frankly, the Bitcoin source code sucks. Bitcoin was very badly made. Bitcoin used software development practices that were awful, but it worked well enough. And early in its history, some bugs were fixed and last minute changes. And what we have is what we have. So we have to go deal with what we have and work from there.
And is Bitcoin the future of our financial infrastructure? Global financial infrastructure?
I would suspect no. I would suspect that we would go see lessons learned from Bitcoin applied to more conventional financial infrastructure, because Bitcoin's a very unforgiving system. Bitcoin has no ability to be fixed other than by convincing everyone to go fix something when an issue comes up.
You think that's solvable?
No.
It's maybe with an alternate coin, would that be solvable? Possible even?
Yeah, but an alternate coin is going to go look like the current financial system, where by human intervention you can make it do anything you want.
Right, with human intervention.
Yes.
But then that's not Bitcoin, is it really?
Whereas Bitcoin says, no, there is no human intervention other than everyone agreeing.
Right.
And I think in reality, for most purposes, that's too strict. In most examples will not want to deal with that.
Why do you think that? It's too strict?
Well, it's quite simple. When people make mistakes, they want to have the ability to have those mistakes fixed.
Right.
The legal system's really good at this. the legal system can make anything happen. I love using the example of hundreds of years ago when various treaties were made between, I'm not even going to say what term I'm going to use, but the people who came to the New World and made treaties with the people who already lived there. And even 300 years later, those treaties are getting ripped up and redefined and modified because it was decided that they were not just and they needed to be modified. Whereas in a Bitcoin system, that would be impossible without having every single person who used the system agree to make the change. All you have to do to rip up a treaty from 300 years ago is convince maybe a dozen judges. But to go change something in Bitcoin requires thousands.
What do you think of BitShares and Mastercoin and other proposals like these ones?
I don't think they're as interesting as Bitcoin itself.
What's interesting about Bitcoin?
That it is money, and that it is something of value without any reference to anything in the real world. On the other hand, colored coins, master coins, so much other stuff like it, they're really just accounting systems based on central identities. Fundamentally, a colored coin is only as valuable as the thing that it was issued by. And while it's certainly very interesting that you can go create an accounting system for shares that is independent of the company, it's not as interesting as creating something out of thin air that's valuable with no ties to a real world identity. And I certainly don't want to go put down colored coins. It's a fascinating experiment, but it's not as fascinating as Bitcoin itself.
BitShares, they want to create an alternate blockchain that gives them all the power to create all these different concepts that you can't do with Bitcoin. Whereas things like Mastercoin or colored coins wants to leverage the blockchain and use all the existing mining power and momentum that's behind Bitcoin to fuel their technologies. Which do you think is the better approach? Or is there no better?
Absolutely, master coins and colored coins. No, trying to go create your own blockchain from scratch for your own purpose is crazy. Mastercoin is embedded in Bitcoin. Colored coins is embedded in Bitcoin. And that means that you get the security of Bitcoin because you're embedded within it. Whereas if you try to go create a blockchain from scratch for your own purpose, it only has as much security as people are willing to throw away money mining it, which is likely not very much, therefore it's not secure.
If a tool has a lot of economic incentive for people to use it, maybe it could drive the adoption of a new blockchain.
No, because it has to get to the level of incentive that is secure very quickly or it will be attacked. But until it gets to that point, it's not secure, therefore there's no incentive to use it.
So why was Bitcoin so lucky?
Because it got lucky.
Right.
That's all it comes down to. Bitcoin could have been killed off early on, but we were lucky enough that it didn't. In some respects, it could still be killed off. And maybe 100 years from now, we're going to be able to say, well, we were pretty damn lucky it didn't.
So it seems pretty inevitable that the blockchain is going to be used and abused, and people are going to build all kinds of different applications leveraging off of it. It's a new concept or a new data structure in computer science which we haven't fully investigated, and the Bitcoin one is the one that's there, and you can start putting stuff inside it. So Bitcoin is struggling right now with the blockchain. Already it's becoming a problem that as it's becoming more resource intensive, we're having to think, okay, how can we make it more easier for people to run it?
The thing is, Bitcoin isn't becoming more resource intensive in the way that matters. And the way that matters is how much bandwidth it takes to keep up with the blockchain. And that bandwidth is fixed. And if we keep the block size limit, it cannot be more than 1 megabyte approximately every 10 minutes.
Well, also write speeds. Yeah,
but that's irrelevant. You have 1 megabyte of data approximately every 10 minutes. That amount is fixed, and the problem stays the same. Now, certainly you have a large amount of data to sync up if you wish to sync up from block 0. But we already have very good handle on how to make cryptography that doesn't require that to be done. We know how to solve that problem. What we do not know how to solve is how to make the block size bigger without risking a disaster. There's certainly some approaches that seem pretty promising, like the sharding stuff, but equally I can tell you that the people who've looked at that think that to go make sharding the blockchain work requires different economic incentives than Bitcoin currently has. On the other hand, the economic incentives behind Bitcoin are broken anyway. And what that really comes down to is in Bitcoin, in the long run, security gets paid for by transaction fees. But the security is needed by everyone who owns Bitcoin. And unfortunately, the inflation rate of Bitcoin approaches zero in the long run. Well, I mean, it does go to zero in the long run. So at some point, that inflation rate will become too low to by itself support enough mining hashing power to keep Bitcoin secure. Maybe transaction fees will go pick up the slack. Maybe they won't. And if they don't, we're screwed. Maybe it'll take 20 years. Maybe it'll take 10. Maybe it will take 100. I don't know. But it's pretty easy to go see that declining curve will hit a point where there's not enough incentive to mine, and the whole thing collapses.
What are the most important topics that we have to research into the blockchain to investigate?
I would say scalability. I would say figuring out how to go make mining.
Scalability in what way? Because you said
just scalability in general.
I mean,
it's a huge aspect. But
you mean for reading the blockchain, for instance, yeah, or for
for all these things. Maybe out of that subset, the most important thing is making sure it's always possible to mine in a scalable way.
But you said it was a solved problem in the beast. One was bandwidth, right?
Right, but as I say, syncing up old history to attain a decent level of trust in old history, that's a solved problem. Or at least we think it is. We haven't implemented the solution yet.
Right, so it's taking these concepts and applying them.
Yes, but solving the problem of making the block size bigger, that is not something we know how to solve, other than solutions like off-chain transactions, which just dodges the shit.
Yeah.
And it certainly dodges in a very nice way. But for a consensus system of Bitcoin, it does not solve the issue.
Yeah, off-chain transactions loses the record, the fact that you have a recorded entry in the blockchain.
Well, off-chain transactions just means that rather than relying on consensus of everyone, you rely on consensus of a very small group where you trust some central service.
You think Ripple could provide something like that?
Sure, but Ripple relies on trust in small, in groups of people. It is not the same sort of model as Bitcoin. Now, the thing with off-chain transactions is you can go use a lot of clever cryptography and other tricks to create systems where you can trust third parties with your money and put those third parties in positions where if they run off with your money, they will actually end up with less return than otherwise. But what you can't do is make it impossible for those third parties to not do some harm to you. It's not like Bitcoin where you can make it impossible for a third party to do anything to you.
Do you think that by thinking more about these fundamental problems in Bitcoin rather than, new merchant solutions or different Bitcoin, websites or payment gateways, this is really a more fundamental area to invest our energy in? And would putting resources into solving these problems help also the merchants and the wallet users?
I think this is just a standard long-term, short-term investment thing. You should do both. But the main thing is to go and accept that thinking about long-term issues is important. And unfortunately, we have some members of the Bitcoin community who think that long-term issues aren't important. And I think what's important is to go say to those, members of the community that they're short-sighted. It's as simple as that. And equally, when someone does come up with some clever new merchant API or some nice new wallet software, I'm not going to put them down for it. They're doing good work. And chances are they're the sort of people who will do good work in that field. And I'm the sort of person who will do good work in my analysis field of long-term thinking. And that's totally fine.
Working this kind of thing like off-chain transactions or blockchain scalability or so on, how can this impact the people doing the merchants solutions or the users of the wallets?
Well, the immediate impact is that if problems in these fields aren't solved in some way or another, and that includes being solved by, compromises and quick hacks, you wind up with people increasingly are not able to go and use Bitcoin for very small value transactions. But I don't see that as a big issue, given that it's very easy to see that most of what Bitcoin's used for is as an investment. And the way you know this is true is you just take all the money that must flow into Bitcoin to keep the price stable, given the inflation rate, and you divide it by the number of transactions. Currently, each transaction costs about $30. And it's spiked up to, I think, $50, maybe. Actually, no, it's probably true. It probably is about $50 right now. And $50 is much, much, much more expensive than anything that the average person's going to use Bitcoin for to make a small purchase. On the other hand, it's not very expensive in terms of being able to go and transfer value around the world with no intermediaries and with no ability to block. Wire transfer between arbitrary banks around the world tends to be about $50. And for someone investing in Bitcoin as an asset that cannot be confiscated, $50 a transaction doesn't necessarily pose much of a problem.
Bitcoin is as a new fundamental primitive of trade, economic tool of business, inevitably creating new markets that didn't exist before. What is the potential that hasn't yet been realized of Bitcoin that could become a reality? What are the really interesting applications or possibilities that maybe things that will undermine old power structures or things that will improve people's lives in fundamental way? What are the things that you really think is interesting about Bitcoin?
Well, I could go and name various pieces of technology that haven't been fully developed. But I think the most interesting thing still boils down to the fact that you have a way of storing wealth that cannot be confiscated. That is really fundamental. Anything else can either be confiscated by simple decree, as in your bank account is frozen, or it can be confiscated by physical force. Bitcoin is digital, yet it cannot be confiscated by decree. And that is absolutely fundamental to what Bitcoin is. It only is possible because Bitcoin is decentralized. And that is something that no other system comes close to providing.
Nothing else in the world.
Yeah, nothing else in the world.
How will that change things? Why is that important?
Well, it changes things in so many ways because it changes what politicians and what governments can do. Whereas all the other stuff that Bitcoin can enable, things like, low-cost payments, things like identities on the internet that, are artificially made expensive. All that stuff, there's other ways to do that. But a store of value that can't be confiscated, there aren't any other ways to do that.
But what are some of the practical things that
I told you practical things. People who are able to go and store wealth that cannot be confiscated. That's a very practical purpose.
Yeah, but what would I see out of that? Would it collapse the governments or the banks or?
Why would it collapse anything?
Well, that's what I'm asking.
It gives people options. It makes it much easier for them to go take action, say, against the government, knowing that they'll have something to fall back on.
Right.
It returns power back to those who are able to go and have some money stocked away. I'm not going to say it returns power back to the people. That's not true. I'm going to say it returns money back to the people who are in a position where storing wealth will be useful for them.
Excellent. Thanks.
You're welcome.
Thanks for listening to episode 73 of Let's Talk Bitcoin. Vegas Live Part 2 was produced by Adam B. Levine with additional engineering by Crystal Levine. It was edited by Matthew Zipkin and featured Andreas M. Antonopoulos, Stephanie Murphy, and Adam B. Levine. Amir and Peter was produced by Amir Taki with additional engineering by Adam B. Levine. It was edited by Matthew Zipkin and featured Amir Taki and Peter Todd. The audio for Think Different, an Apple commercial from the late 90s, was played in its entirety. All branding was visual, and listening to it again last week, I was struck by the words and really wanted to share it. I hope you enjoyed this out-of-context thought. Music was provided for this episode by Jared Rubens, Calvin Henderson, and Matthew Murkowski. Questions or comments? Email Adam at letstalkbitcoin.com. Have a good one.